So, as a lot of you may have already noticed, the market has had a slight dip since Monday. The S&P is down about 2.7% since Monday, as well as the Nasdaq being down about 3.5%. And today we're going to talk about the reason why. And I believe that is because the big man himself, Michael Burry, from The Big Short, the guy who basically bet against the U.S. economy and the housing market in 2008, he also just bet against a stock market crash. He put $1.6 billion in puts against a stock market crash. Now, today we're going to talk about, is this kind of a valid move on Burry? Do we actually think the market's going to crash? What's our overall takeaway from this? So, like I said, markets had a slight dip. I don't really stress, a little 2% drop. That doesn't mean much, especially after last year when the market just pretty much tanked most of the year. But let's see, is this short position a reasonable thing? Obviously, with Burry throwing a huge short position, that's going to scare a lot of investors because he's really putting, the money where his mouth is. So let's take a look at this. So Michael Burry here, the big short investor, predicted the housing market crash. Like I said, he bet $1.6 billion. He's making bearish bets against the S&P 500 and the NASDAQ 100, according to the SEC, released Monday. So the market started dropping after that released Monday. Tuesday, Wednesday, Thursday, Friday, pretty much slightly negative week. So he bought $866 million in put options, which, if you don't know what puts are, it's basically just betting that something is going to go down below the strike price. You're basically betting that the stock or the underlying asset is going to drop. That's all you're doing. So he got $866 million in put options against the S&P 500 and then $739 million against the NASDAQ 100. This is the part I think that should definitely, I don't want to say scare investors, but it should be kind of like, okay, maybe this guy's actually shooting the flare. He put more than 90% of his portfolio to bet on a market downturn. So that's definitely a little nerve-wracking when you got the guy that bet against the housing market doing this, putting 90% of his portfolio betting against the market. But I do think this article points out something that's pretty interesting, is that Burry this year has been very back and forth. Because I do remember this. Earlier this year, he was telling his 1.4 million followers on Twitter to sell, but then by end of March, he backtracked and said he was wrong to say sell. And then now from March to August, the market's continued to, run up and do pretty well. Now he's actually shorting the market. And as you can see here, they're up nearly 16% and 38% respectively, and that's year to date between the S&P and the NASDAQ. So overall, what is my takeaway from this? Should we be buying? Should we be selling? I think let's start with this. Let's see what the largest holdings in the S&P 500 and in the NASDAQ are. So if we're starting out with the NASDAQ here, the QQQ, scroll down here at the bottom, you can see its largest holdings are Apple, Microsoft, Amazon, Nvidia, Meta, Tesla, Broadcom, mainly tech, right? You get the gist here. I mean, obviously Tesla's a car company. Some people argue it's tech. I don't really care what you think. Regardless, this is mainly tech right here if you look at these top 10 holdings. And then taking a look at the S&P 500 here, if you just go to the holdings, scroll down, you can also see its largest positions are also tech. I mean, they do have Berkshire Hathaway in the top 10 as well as United Health Group. So, I mean, that's healthcare. But regardless, you can see it seems like Burry is making a bet against big tech because the largest holdings in the S&P as well as the NASDAQ are companies like Apple, Amazon, Nvidia, Microsoft. And right now, about 17% of my portfolio is Apple and Microsoft. So this does pose some risk to me. And like I said in my last video, I've actually been trying to lower my overall tech concentration just because these stocks have had a pretty crazy run up. So it wouldn't surprise me to see somewhat of a pullback. So let's take a look at these stocks themselves. So if you look at a company like Apple, they have a 29 PE ratio. But let's go look at Apple's revenue real quick. So if we look at that the last 5 years or so, we can see that obviously the year-over-year quarterly growth, pretty good on some quarters. They do have a few that are slightly negative, but that's pretty normal. You don't expect it to always be green, but for the most part, their highest year-over-year quarterly growth was in 2021, which makes sense because COVID basically lowered the numbers, so that it makes sense. The year-over-year growth, of course, it's going to jump. It's the year after COVID. But the thing I wanted to point out here is if you look at this, you can see that they're really not growing much year over year. Like Apple's negative 5.4%, negative 2%, negative 1%. So, I mean, it is trending upward. And Apple, of course, is going to have negative quarters. But, I don't think Apple's going to be growing like what we were seeing back here, where it's growing, 20%, 40%. Some of these big numbers, 30%. I don't realistically see Apple holding this valuation, like holding a 29 PE ratio. So I'm not saying they're going to tank right now. And it doesn't necessarily mean the stock's going to tank just because I don't see it holding that valuation. What that could mean is that the stock sits flat and then the earnings catch up. But I feel like a 29 PE ratio for a company not growing much year over year is a pretty high valuation. $2.7 trillion is a huge market cap for a company. You can't really expect that company to be growing at 20% a year. I mean, that would be a massive business. But let's take a look at NVIDIA. That's another really big one. Look at them, 226 PE. I mean, it's a very high valuation. 226 PE means that you're paying $226 for every $1 in earnings they have. Kind of a similar story with NVIDIA. As you can see here, very positive from, 2020? I mean, even through COVID, they were positive. Good for them. All the way up to July 2022, but they have dropped a little bit more negative. So I don't know, when I see stuff like this, it definitely makes me a little concerned. It's not that I think these companies are going to do bad. That's not the point I'm trying to make. The point I'm trying to make is that I don't know if these large tech companies that aren't really growing that much year over year, I don't know if they can hold these valuations. I mean, they're pretty high valuations. Microsoft, very similar thing here. 35 PE ratio. Now Microsoft's all green. I mean, that's beautiful. I love Microsoft, one of my favorite stocks. Do I think they're going to be growing 20% year over year? No. As you can see, they got 2% growth. They got 7%. They got 8%. Realistically, I see Microsoft sitting more around 10 to 12% growth. I mean, maybe 8 to 12%, but right around that 10% mark is what I could see Microsoft doing moving forward. And with that being said, if a company is actually growing at 10% year over year, I'm not sure if they deserve that 34 PE. And I also understand that I'm only looking at PE ratio, but even if you look at price of sales, it's pretty high for a lot of these companies, it seems like. But let's look at Amazon. So they are at 317 PE. I think it's because their earnings are low, though. I think that's the only thing skewing that. But Amazon, that revenue growth is great. Obviously, as you can see, it's slowed down a lot the past year or so. Like they're sitting more around that 10% mark. So overall, I know I was just kind of looking at the PE ratios and looking at, revenue growth year over year, but I'm not sure if I necessarily agree with the idea that some of these companies should have their valuations at where they're currently at. Now, I don't want the stocks to drop because, like I said, I own Apple, I own Microsoft. That means I'm losing money, but it wouldn't surprise me if they did drop. Now, do I think that it's worth, putting 90% of your portfolio to bet against the market? No, but also Michael Burry has way bigger balls than me, and he's shown it in the past. I mean, in the '08 crash, I'm pretty sure he threw a ton of money at that, and he waited for years for that thing to crash, especially if you watch The Big Short. It may not happen tomorrow. Honestly, the crash may never happen because we kind of just went through a rough 2022, but I think Burry's just mainly making the bet against big tech. Now, let's see what Kevin O'Leary has to say, because I did see a little article here. So Shark Tank investor Kevin O'Leary says Michael Burry's bet against the S&P 500 is going to be painful, even if he's right eventually. I think even if he's right eventually is kind of hinting at, you could be right, but by the time you're right 2 or 3 years from now, it could be painful. Like you could have lost a lot of money in the meantime. People that try to live off market timing have a very hard time. You get lucky once, as he did with the housing syndication and mortgage debt, but this is a whole different kettle of fish he's playing with. O'Leary said this to Fox News on Wednesday. To say that I know when the market is going down, he will be right one day. When is unknown. I do agree with this. I mean, he could be right, but if it's 3 years from now, is that worth the short position now? We don't know. And how much pain he will have to take along the way, and does he have enough dry powder, as they like to say, at the margin desk? What he's saying here with the dry powder is, does he have enough money to keep buying these short positions? Because how calls and puts work, if you guys don't know, is basically, if you buy a call, you're making a bet that the underlying asset's going up, and the put is the exact opposite. You're basically making a bet that it's going to go down. What he's saying here is that if the put expires worthless, you're going to have to buy more puts. So if I think the S&P 500 is going to drop below a certain price by the end of September, and I'm incorrect and I'm not profitable or in the money by that end date, then the value of that put goes to zero. I hope that makes sense. It's a little bit confusing. If you don't know how it works, just look up the basics of options. I do not suggest options trading. I also do not suggest shorting because, like O'Leary said, it gets painful. Like you could be right eventually, but if you're right at the wrong time, then you're just going to lose a bunch of this money. So my overall conclusion when looking at Michael Burry's short position is it a valid claim? yes, I do think there's definitely some valid points to be made about big tech has had a really great run. But if you actually look at the earnings year over year, these companies, they're not growing as fast as they were 3, 4, 5, 6, 7 years ago. And so is it reasonable to assume that they may drop? Yes, but also what could happen is they could just sit flat and then their earnings slowly catch up, which makes their valuation a little bit more reasonable. It feels like they're less overvalued. And so I could see both those things happening. The main takeaway, though, that I want you guys to get from this video is that regardless of whether the market goes up or whether it drops, just keep buying consistently. I mean, keep buying the S&P 500, keep buying, especially as a dividend investor, keep buying SCHD. You know, these are the times to be buying the dips. When the market goes down 2 or 3%, I'm buying. And if it goes down 20%, I'm buying. And if you don't know what to buy, just buy the market. It's pretty simple. Now, that's not financial advice, but that's typically how I like to do it is if you're not really confident what stocks are undervalued or overvalued or how to play it, buying the market's usually a pretty safe move. And I also like buying a lot of SCHD just to get that dividend income along the way. So that is my overall takeaway from this video. I hope you guys enjoyed it. If you did, remember to drop a like down below, hit that subscribe button. I'll see you in the next one. Peace.